light news week here for us in the mortgage industry, but the market responds with some pretty big moves. So with such a light news week in front of us, the technical picture, the bond chart actually plays a much higher role. I don't want to get too much into the weeds, but we were really at a point of inflection. We had a ceiling above us, and we needed some strong moves to get above this ceiling. And unfortunately, the news that we did receive was really all negative. So all eyes have been on the debt ceiling in Capitol Hill as they work to resolve these issues. And unfortunately, we really saw only sideways movement, maybe even slightly negative. And that's definitely how the media is portraying it. You couple that with the bank weaknesses that we've been seeing in recent weeks, and it's put a lot of negative pressure on the mortgage industry. So just to outline what happens with the bank weakness, they actually hold a lot of mortgage-backed securities, and to raise capital, they're selling these bonds, and that just puts that negative pressure on our mortgage bond pricing. This week, also, multiple Fed members met with the media, and their overall consensus has been that they've just not done enough to fight inflation, and the fight needs to continue. So Fed futures, which is a measure of the probability of an interest rate hike at their next meeting, jumped from almost 0% up to 40% throughout their meetings this week. And the real big bit of news that we did receive this week was existing home sales. This is a measure where they strip out brand new homes just to see the overall health of our current market. That dipped lower from a very strong report last month to a little lackluster of a report this month, and pushes our total home supply into all-time lows. We've continued this trend. We've been in it for a while, and we need to do something to break out of it. This tight inventory is keeping prices higher and elevated. The housing market is resilient. It's really the Rocky of all things right now, just keeping in it, staying in round after round. You combine that with our extremely volatile high interest rates, and it's easy to blame affordability as one of the key reasons for sales staying so low. Moving to our interest rates, we had a light uptick this week. So our conventional jumped up to 6.75%, FHA and VA to 6.125. A side note on that, all VA for the month of May has some additional incentives in honor of Military May. So just to keep you informed on that. And our jumbo rates are still staying strong at 6.25. Please reach out if you have any questions. Happy to dive into this further. You take care and have a wonderful weekend. Bye-bye.